Welcome to the Trading of Things channel. This is our third installment since the last one, which was about 9 months back. The objectives are as follows. Okay, these are objectives. As you can see, we'll be discussing the hiatus since the last video, the general discussion on trading, discussion on trading strategies, and discussion on setups. Um, Well, the underlying reason for the hiatus for not posting the videos over that break was that I was distraught, disgruntled. Why? Because the strategy that I was applying was not yielding the expected results. In a nutshell, I was sad and disappointed, and that sucked the motivation out of me. And then the second reason I was also not motivated to edit the last recorded video. Editing seemed cumbersome and time consuming. Compound that with a knock on motivation precipitated the hiatus. So, conclusion, I believe that I've learned and improved the trading strategies and as well as improving on my recording and editing skills. Um, so I expect an improvement and efficient process. This is our disclaimer. The following video content is for educational and informational purposes only. It is not intended to serve as financial advice or to replace independent research. Users should be aware that trading carries risks and they should consult with a licensed professional before making any financial decisions. So now we will be um, discussing we're having a general discussion on trading. Um, and for this purpose, there's a beautiful article which we have, which we're going to use for this purpose. And there's this article called "The Retail Investors in the Foreign Exchange Market." It was it's the work of two academics or two people. I don't know whether they're academics. I'm just speculating, but um, two people who are uh, I- Iwona Sobol and Monica Sismelter. And I'm almost certain that I'm bungling the pronunciation. You'll pardon me. But the two people from the University of Gdansk have produced this wonderful work. So I'm just going to read the abstract, which reads as follows. The foreign exchange market is the largest and the most liquid market of the world. Up to the late 1990s, the FX market was dominated by financial institutions and large corporations, which conducted FX transactions for hedging, speculation, and arbitrage purposes. While these participants still constitute the most important part of the market, the role of retail investors has been increasing since the beginning of the 2000s. FX trading conducted by retail investors has become significant enough to be included in the FX market statistics provided by the Bank of International Settlements. The data collected by BIS is the basis for the analysis conducted in this paper. The main objective of the study is to examine the factors which contributed to the emergence and development of the FX retail market, as well as to analyze its size and structure in comparison with the total FX market. So, yeah, so I find this to be quite an an interesting read. So what we're going to do, um, so I invite you to look for this paper, and then you can go through it. Um, you can go through it, and you will find some fascinating insights about the trading industry. So now we'll be going back to the slide presentation. All right, which basically just captures um, some of the items under that research paper. Okay, the foreign exchange market is the largest and the most liquid market in the world. Within 30 years, from 1989 to 2019, um, the daily turnover in the FX market increased 11-fold from 590 billion US dollars to 6.6 billions, which means 6 trillion basically US dollars. The dominant segment of the FX market is the over-the-counter market, which is a decentralized market where transactions are conducted 24 hours a day, 5 days a week throughout all geographical regions. While this, while still those participants constitute the most important part of the market, the role of retail investors has been increasing since the beginning of the 2000s. By those still, uh, while still those participants, it's referring to the big money, your hedge funds, your banks, your pension funds. So those, it is pointed out that they are still the big investors as much as the retail investors, which is anyone outside of big money. It's us who open our own individual accounts and try and and do the trading on our own with through the brokerage platforms that are widely available in the market. So so basically this paper, as it was pointed out up there, it's about the impact that the retail investors are like having in the industrial market. It's as well as discussing the factors that precipitated the current developments. So I'll continue reading. It is pointed out that unlike participants of other markets who conduct transactions for a variety of um, different reasons, which may include issuance, hedging, cash management, fiscal or monetary policy, trades on the retail forex market are almost exclusively carried out for speculative purposes. So basically, individuals who are trading on their own, small money, the main reason is because we want to profit, which there is it's underlined as speculative purposes. All right. Trading industry. Okay, we still continue reading. Profit motivated trading has become the main segment of the retail FX market, and mainly trading conducted in this segment has contributed to the significant increase in FX retail trading in this century. Another important factor that contributed to the development of the retail FX market is the globalization and liberalization processes, which resulted in lifting foreign exchange restrictions. So, yeah, this um, section just discusses the factors behind the emergence and development of the retail foreign exchange market as to why it came about. First of all, it is an OTC market which is open 24 hours a day. Moreover, unlike centralized exchange markets, the decentralization of Forex allows traders to choose from a large number of different aggregators with which to place trades. The Forex market is also considered to be the most liquid market. One of the most important attributes of Forex are the low capital requirements. So, is the world of small money, just discussing those factors behind the growth of the retail investors in the trading industry. From the investor's point of view, it is a very difficult and ruthless market. Trading in Forex requires a lot of knowledge and skills, perfect mastery, discipline, and above all, an appropriate investment strategy. Uh, I've always contended that in order to be successful in trading, you don't need a whole lot of money, but you need exactly what's captured here: a lot of knowledge and skills to a point of mastery, discipline, and above all, an appropriate investment strategy. I couldn't have said it better. That's what I believe you need in order to emerge successful, because the market is difficult and ruthless. Carrying on, trading in the currency market is dominated by the financial institutions. By 1990, by 2019, excuse me, by 2019, 92.8% of global trading volume was driven by these financial institutions. The transactions between financial counterparties grew by 25% to 6.12 trillion US dollars per day in 2019, up from 4.8 trillion in 2018. So we're talking about the forex market being so huge, and this is supported by this paper, as I'm sure you've heard the numbers being bandied about, that it's a 6 trillion US dollar um, volume business per day. So it's a serious market, serious money is busy. So if per day the overall market, the overall turnover goes to 6 trillion, retail driven turnover per per day rose from 282 billions US dollars in 2016, which is a 52% increase compared with 2013. In contrast, the turnover declined in both absolute and relative terms in 2019, with the share in global FX turnover falling to 3.1% in 2019. The share decreased from 5.6 in 2013 and 3.5% in 2013. If you go through the paper, they give reasons as to why, one of which includes the regulation, especially in the US. Because what we've what we've what has become interesting is that if you look at the developing countries like South Africa, where I am, um, and I guess Dubai, it's so Dubai, by the way, is just a capital up there. So places like the Emirates, which I think is a developed country, but regulation-wise, they're not as stringent as the US and the UK. So so this has driven even people, I suppose, from the States and the UK to open their accounts here in South Africa or other developing and other developed countries where the trading industry, especially the FX trading, is active. So I suppose that's one more reason we've seen movements um, to the Seychelles, I think at one point, and then now Dubai is also one of those, and South Africa, uh, where there's like an active market for retail investors. Because in developed countries like the US, I think part of the regulations include limiting the leverage ratio. I think at one point it was 1 to 50, 1 to 30, which for retail investors may not be good enough, may not be um, may not be enticing enough. But for developing and underdeveloped economies, I think there's still leeway. Hence, there's been such active um, active trading, active FX trading, active retail trading in South Africa, amongst other places. I think Nigeria, in Kenya. So basically, in Africa, I think this has been very, very active, and that's part of the reason. Now we are going to the trading strategies. Um, all right, maybe before we go to the trading strategy, um, let me just go over this. So, for the trading industry, for what we have here, so I hope that we'll have, rather, this segment of the video will go over some of the interesting issues, stories, facts, etc., over the trading industry. I think this industry is quite captivating, that there are interesting stories we can share on each video. Today, um, I was summarizing some of the findings on the research that we went through, which is the retail investors in the foreign exchange market, published November 2020. Trading strategies. Trading strategies are different based on various factors. One of the distinguishing characteristics of trading strategies is the intervals for which positions are held. The, this distinction is drawn between daily traders and swing traders on how long are the positions held. Daily traders, um, just on a simple basis, they hold positions, or daily trading entails that positions are held, um, rather are not held over a day. So basically, positions are closed overnight. They are closed by the close of the business. So the daily traders, they don't have sleepless nights, amongst other things, because their positions are closed. They hold positions for the short term. And then we have the swing trading. Swing trading is split between medium term and long term intervals. Medium term interval um, entails that positions are held for days to a few weeks, and then long term intervals entails that positions are held for weeks to months to even years. So basically, it's about the difference in how long the positions are held. Given how involving the daily trading strategies are, therefore, daily trading is not suitable for most people who would like to trade. This group includes, I suppose, full-time employees, business people, students. Um, so basically, daily trading, it's not suitable for most people. On the other hand, swing trading, I think, is suitable for people with other daily commitments as it is less time sensitive. I think swing trading has the added benefit of allowing one to attend to other commitments, you are not, even if you are not employed or a business person or a student. Therefore, I think it is possible to trade even if you have other commitments, provided you have access to the resources, brokerage accounts, some capital, and I think also access to online to online resources, access to the internet. In this case, one can cultivate this asset class and successfully use it as another stream of sustainable income. Therefore, we'll be assessing the effectiveness of the swing trading strategies over the course of weeks, months, years, even. But most strategies will lean towards medium term interval rather than long term interval. Another important consideration with the swing trading strategy is that it will be bolstered by a rigid risk management strategy. This entails that only the minimum investment will be applied. That is 10 US dollars for the initial trades and adjusted accordingly as the capital grows. I think that for most people, $10, 10 US dollars will limit the emotional vicissitudes that otherwise most people would experience. Of course, the minimum investment will be complemented by the minimum lot size. By applying the swing strategy this way, we'll be cultivating a sense of patience. As we know, it is a hallmark of a trade and of a trader's virtue. Therefore, I invite you to this adventure of the mind shift, where I believe we will learn to be patient and avoid being emotional wrecks. The market is known to be ruthless and has left deep emotional scars in its wake. Welcome to the religion of swing trading. Setups. In this segment, we will do two things: evaluate the prior trade setups to assess whether expected moves have started or that we're still waiting for the moves to start, or targets were hit, or alas, that the market took our positions out. The second aspect of this segment is to assess the prospective trade setups. These will entail entry levels, take profit levels, how far we expect the market to go. For this week, um, for this week, there's no review of prior setups as this is our maiden review since the hiatus. So now we'll go to the prospective setups, of which we have um, the US oil, the Dow Jones, which I think is the US 30, the Australian dollar, Canadian dollar, and then the German 30. So we will switch to the trading view to go over those. All right. So with the as stated, we have four prospective trades. Let's start with oil. Okay, oil. Oil is bouncing off what I think is the support. I I still think this is the This is the buy, this is the buy market. It's an uptrend. So I take it that the level which it hit, which is this line here, for 73,958, that this is the support where it bounced off on its way to go up. Um, so if you look at the up arrow here, we're expecting to hit it to take out this and the least to take the minimum, uh, to take in the minimum to take this high and then probably go on its way to hit 83.431. So our setup is as shown here. Um, so it has the entry at 73.958, and then the number one take profit level, more likely it is that high, and then the likely one is just above the um it's just above that, more likely, which is the 73, the 73. I think a mistake was made here. Let's see. To the 77. Right. Yeah, actually, this should be 80. All right. Oh, okay. I think I see what happened. Um, all right, I'll take this high. What was the high? 79. Yeah, this is supposed to be 79.55. All right. So based on the Fibonacci, so this level is most likely, and then we're saying the high is likely, and then this one based on the Fibonacci level, which, yeah, the 83,431, that it is less likely. So if each per each trade that you put, in this case likely to put two three, three trades, I'd recommend that for each trade it should go with that $10 US capital, right? And then so basically $20 if ever you want to capture this, the likely and the more likely, which are this one and this one. The other one, probably you can forget about it. So that's my take on this one. We're going to the second one, which is the US 30. With the US 30, I think that the is showing that it's in the short term, is or the medium term, it's showing signs of being bearish. This this if you look at this line, it shows like it's a headers and shoulders. I think it's the start of the formation of the headers and shoulders, meaning the start of the formation of the other shoulder. And if we write, then the minimum, the likely level, more likely it has to come to this 41,895. It has to take this 41,895. And then from here, it may consolidate, which means it may still go up a bit, maybe to go retest, or maybe it can breach and then go down. So I would recommend that probably um, you enter here at this level. You enter here at this level 44,545. Um, and then we go out of 41,895. And then we will assess whether breakdown or not. For this one, let's see if we can do this. I did not include uh, the setup information. Let's see if we can do that. Okay, setup. Okay, entry. Entry point. Um, it's 44. Level in this 44530. Okay, 44545, and then take profit one. It will be at what's that? 41.895. Yeah, we can go with that one, and that's it for this one. Um, and then we go to the other instrument, which is the AUD CAD. AUD CAD. Okay, it's this one. The AUD CAD looks like it was retracing, so we'd expect it to go down. However, on going down, I I don't expect it to go and take out the lower low, because from the area of interest, which is shown here in purple, it already formed, it already breached the what was supposed to be the resistance. So I would expect it to come down and bounce off it and go and then go up. And then so our setup for this one would be that setup would be an entry on, okay, 09, 0.90591. And this is the entry of 0.90591. Take profit would be um, our take profit would be somewhere here. Yeah, 0.90000, and then yeah, we'll assess it from then. Um, oh, I'm supposed to even biocell strategy. Strategy. This would be a cell, and then yeah, this would be it. Cell entry. Uh, and then so now yeah, I think that this would be it. And I never indicated on the other side whether it's a buy or a sell. But let me go ahead and do the German 30. Um, the German 30 is very, very, very appetizing because based on conventional um, price action strategies, you can see it has hit the upper band 3 times. This is the third hit. So we expect it to come down. Actually, it also shows signs of coming down, as you can see the bearish candle. And then, so the entry, um, I'd yeah, so long as it's above the upper uh, the upper bullish line, the upper trend line, I think we can enter it. It's a sell trade. So let me capture that trading information, which would be as follows. Set up. Okay, it's a sell entry. Currently, it's sitting at 21,392. Yeah, I can still take it there. 21,392, and then take profit. We expect it to be on this area of interest in the list to be 2,500. Yeah, 2,500. We can put it at 2,500, and then we will assess whether it's going down or not. Yeah, that's about it. I'd like to thank you for taking your time to check out my video. Please like, comment, and then let's have a great community. I believe that we'll be able to cultivate a beautiful psychology, cultivate patience, and then hey, who knows? Maybe this will be our long term our long term engagement. And then as we learn and improve, and we hope as we learn and improve and empower ourselves with this information. I'd like to thank you until the next installment. Thank you very much and have a great one. Ciao.